How to make money when the market is crashing. I'm Tim Diesel, a commercial real estate consultant. Today I want to talk to you about some opportunities that could be coming up and maybe you may not be aware of them. So when the market is going down, and we're specifically talking about the real estate market, I don't know how you would take advantage of a stock market or Bitcoin or anything like that. It's not what I do. Businesses and commercial real estate is really the specialty here. So when the real estate market is going down, typically what you'll hear everybody say, I can't wait for the market to crash so I can buy all this stuff at a discount. And we've talked about this before. Everybody says that. The truth is, not very many can take advantage of those opportunities, because if they could have, during the last meltdown, there would have been a lot more millionaires and wealthy people took advantage of those. The reason why, obviously, is because of the financing. Unless you have a pile of cash lying around, you really can't seize a lot of those opportunities that are available. So what I have found is the best way to take advantage of those opportunities is to have the owner finance you. So when the market is going down, it doesn't go down overnight, right? It's not like a plop. It goes down slowly. Now, the transaction volume does go down immediately, but the price of the property takes a while to go down. So you're not going to go from a $200,000 property to $100,000 overnight. That's not going to happen. What will happen is if interest rates go up, you're going to have maybe 50 properties being sold every month. Now it's going to be a lot less, maybe 20, maybe half of that. It'll be very dramatic. But the prices, they take a little bit to catch up, which is why you'll see now prices are still kind of high, but the economy isn't doing very, very well. Those are two different things. They have nothing to do with each other. So suppose you're looking at a, let's just call it a 20 unit apartment building. That's usually the easiest example, and that's what everybody's targeting. The likelihood, and let's just say it's $2 million. I don't know where it is in the country. We're just using an example here. So it's $2 million, and you notice with rates going up, and after you do your calculations, this thing is probably worth $1.8 million. Because you got to remember, as rates go up just a little bit, financing changes everything, right? The price of the property changes. You can't raise rents so much because the economy is shaken up. So really the values drop a little bit, and the cap rates really dwindle down a little. So the best way to do it that I have found, because if you're following my work or if you're one of my clients, the truth is we really care about appreciation long term, because that's how we're going to make our money. Immediately, we want cash flow to help us sustain and keep the property going, so we don't get into a negative cash flow situation. So if the property is worth 1.7, 1.8, I offer the seller the $2 million that they want, with the caveat of you're going to have to finance me more money. Nobody else is going to pay you this amount of money, so you're going to have to finance me more money. Now, I was able to do this successfully on a number of properties. When the market was going down, sellers could not move these properties, and I would take them over. Actually, me and my group, a lot of my partners and investors, we would take them over, and we would pay little over market price, because market price kept dropping every little bit. And the condition was you guys help finance a lot of it. Now, the bank is going to retract their loan to value percentage, meaning if they offered 85%, they're going to offer you 75% of the loan or 65% of the loan. So in retail properties, that's a lot. That's really happening a lot now. And most apartment buildings, you can get a lot of apartment financing for 80%. I've still seen that. 75 has usually been the norm as long as I've been doing this. So you could always typically get 75% loan to value financing. So when you see these opportunities, how do you know these opportunities are coming up? It's very simple. Most of the time, what you'll notice in rents don't drop. So if someone's paying $1,000 for a 2-bedroom, it's very rare that I've seen it $800 or they haven't slashed it. What they do is they'll offer a month free or 2-month free or no application fee or some kind of incentive. but they very rarely discount the base rent every month. Now, if they are for sale, you're typically not going to see a big sign in front of the property that says for sale, like you would in a house, right? Most of the time it doesn't happen. You're going to find it online. You're going to find it from another broker. Maybe if you've contacted the seller and you keep following up with them, then you'll know they're getting closer and closer and closer. So as long as you know, or if you have a few of these opportunities coming up, and you're making your offers, if you're submitting your letter of intents with the owner financing in place, because that's what's going to help you buy these things very easily. If you do that, when the market is going down, and it will start dipping, you just ask for more owner financing, because the bank's not going to give you any more money. The bank's usually going to cap it off. They're going to value the property as worth a lot less, significantly less, with the interest rates going up, with the financing, with everything paired together. So keep your eyes on those opportunities. The biggest thing you want to get from this is you can make money when the market is going down. You do not have to wait until it's rock bottom. So there's definitely ways to do that. If you have any more questions about this, please let me know. I'll be glad to help you. Thank you.